Good morning, everyone. So we're getting some stabilization, and we've been looking for a turn over the last day or two. Maybe today there's going to be some, holding on to the gain that we see happening here. So what I'm showing here in intraday, looking at the internals and pointing out how the selling is beginning to dissipate. Of course, selling can increase again, but let me get my little spotlight out here just to show what I mean. There's been a lot of selling. Obviously, you can see the way things have moved down. We've talked about this measured move into support around this 3,600 level. And, looking at the futures anyway, had a narrow bodied bar yesterday. Things initially started higher, and then they, as I posted that video last night, sometimes prices go down because they didn't go up. And that's really what happened. As it came up to resistance there and it couldn't get through it, sellers gave it up. And of course, interest rates were moving up. The 10-year was moving up to 4%. And so, institutions just decided to get out of the way. And what we see is that the capitulation here, just as far as breadth, hit its high point, on this day here as it was going down. That was the wide range bar. So when we see a wide range bar on a move down, it tells us we're getting close because that's the capitulation. We see it through the range expansion. And then we start looking for slowing in momentum, which is, the candle bodies getting narrow, the range between the highs and lows narrowing. And you see the range expanded here, but the candle body is narrow. We're looking at the futures. So just like every day when we look at what's going on here, we see where prices are at. And then, of course, where does it end up at the end of the day, which was the comment yesterday. Yeah, prices are up here. They're at resistance. Can they hold on to the gain or not? And they didn't. They went down. So what we see is, this big increase in momentum from this consolidation, and then it consolidated. Maybe it could have bounced and it failed, and momentum increases again. And now we see the distance between the lows coming closer together. And so we see this slowing in momentum in different ways. Narrow bodies, ranges contracting, distance between lows, or actually, what we're looking at here is the distance between the next leg down becoming weaker. And so here we see it in breadth, where the breadth is actually improving, where it reached a peak here. And then sentiment reached a peak on that day as well. You can see the cursor on the wide range bar there, where there was a lot more put buying than call buying. And that reached a peak at this point. And so, it moved up yesterday, obviously, as, the selling continued, but not as much as it did here. So now, look, we have this information that helps us to look at what's happening and say, okay, our internal gauges here are suggesting or confirming our thought that momentum should begin to slow down here. And so it's slowing down here in a way that's constructive potential. I think so, for, maybe the end of the week or next week, in that, let me just minimize this, more bars making the turn versus, a 1-bar turn. So one bar turns can be fast and furious, so to speak, and then things come back down. Whereas if we have multiple days where it goes sideways down here, and if that should happen, we're going to have another kind of going to go nowhere kind of a day here, or stabilization day. And even if it can start to move up, where's it going to go up to? It's got quite a bit of resistance here to get through. So I don't think things are going to go very far today, but we got this stabilization going on here, which is a good thing, as far as some kind of tradable bounce. It's still in a downtrend and it's broke support. And if you watch the video that I did over the weekend and the monthly charts, suggest this isn't over yet. We're just looking for a bounce because things are extended in the short term. ultimately, coming down to this level down here on the weekly chart, I think is a real possibility after we get some kind of a bounce. And the only thing that's going to change that opinion is if the bounce is substantial, meaning a deep retracement back against this move up versus what would just be a normal kind of a bounce after an extended move down. So we'll see how that all sets up. So this is how the internals help us, meaning, we have objective information based on historical reference points, based on what the markets have done in the past. They guide us, and then we see prices confirming, and we see prices continue to advance here a bit. Now with this pivot high here, so it's likely to stall soon. Okay, so let's take a look at SPY. Let's look at that to see where it is relative to the prior day. And of course, this looks different than the futures because it doesn't have the overnight data. It just gapped up and prices went up a bit and then they fell. And so this was taking out the low. I would eyeball, and the range is a little bigger than the prior 2 days, but closed near where the prior day was. So now things are gapping up a little bit, not a big deal, nothing to really get excited about. Things are stabilizing. And again, kind of like, okay, today maybe another stabilization type of a day after multiple days down. And you can see it broke this prior low, which is fine. The concept of a greater than 100% retracement is one that suggests to us after a greater than 100% retracement, look for slowing momentum. Doesn't tell us exactly where, just part of our thought process. It says, hey, look for it. Things have gone down. They've broken the prior low. They've taken out stops, some psychological damage there. By stops being hit, momentum should slow. And then we go and look at internals and day-to-day prices and pivots, just like I have already explained. So still waiting for this to materialize, and maybe, okay, this gap, if it holds on to it, you could see, since it's at this resistance, as I showed you on the futures, selling is starting to pick up a little bit here. It's stalling. So maybe we just get an inside day today. We'll see. Now, if we can have these days where today, maybe, we get a cluster of days here, and this low, poking down here is the low, and get an inside day, we've got more stabilization, and the hourly chart begins to form a base, and we look for a counter trend trade. And let's see how far it goes. And so this is how we put together market internals and our price data, support and resistance, and other concepts to form a bias. So SPX. Yeah, Jacob, I looked at that, and maybe a little bit greedy on my part. I've written down, because of the premium and where things are at and what I've said, I've written down 35.50. But 35.40, yeah, I thought the same, and where the premium was, but I thought we could get a little bit more juice because of what I just explained. And then on the upside, considering this consolidation and the stabilization, I've got 37.60, which is into this gap fill here in the next area of resistance. So I don't think it's going to get above here. So, I think 37.60, unless things start to rally at the open where we can get a little bit higher. But I think a condor, and we're pick and choose whatever. But I think that will define the high and low that prices won't go to. 35.50, 37.60. And we always look at where our lines of defense. So 37.20ish, we got two pivot highs there. And then here we've got a gap fill in this congestion area. So we've got a few areas where prices would have to get through to get up there. And on the downside, we're really relying on the distance being far away, 3,600 being a whole number. And as you can see, there isn't much of stopping this from going down, but short term, it's already extended here and everything I've covered. So I'm not going to reiterate it. But we're in an area where prices should definitely stabilize, which they are, and then try a move up. Now, if they hang here, I'm getting a little thought process into the latter part of the week. If they hang here and we don't get above these highs after a couple of days, that's kind of like what's happened here. It's not exactly the same because this is extended. This broke under these lows, but the more time it spends sideways and can't pop up, well, in this case, on the Fed day, it popped up and failed. That's going to fuel the tank to coming down into this area, which, go back and look at the video I did on the weekend with monthly charts. And ultimately, that looks like somewhere down here is where it's going to be going. Yeah, Blue Horse, I think most of us, if we watch any of the news, we see what they're doing there in England and the gyrations. They're kind of capitulating there and throwing in the towel or putting their, I guess, their egos aside and trying to get things to, stabilize. So, you can see, government intervention isn't a good thing, but look, they've gotten the pound to begin to stabilize a bit. So, currency's getting killed, with the dollar. It's been on a tear, and you can see it's stabilized here for the moment. And this is what we've been looking for when in the market. Stabilization would be, hey, the dollar is getting extended. Maybe if it starts to pull back, just a retracement within its uptrend, and then, the 10-year reaching this 4% area may not be ultimately where it stops going up, but hey, that's short-term extended. If this starts to pull back, the dollar starts to pull back, and the market stabilizes and we get a bounce. And then if the 10-year pulls back into this area where buyers are going to step up again, and the dollar and so on should be the next leg down for the markets. But again, we'll see how it all unfolds. Here's the 5-year. You can see moving down here this morning, and the 3-month still hanging up there. So just looking for bounces here, and we'll see how far they go. And still looking for it to stabilize, of course. All right, other markets, Nasdaq futures, and you see all the bodies, the opens and closes, they're clustered around the same area. That's momentum stalling. Right, so this was rejected, and we'll see. So these rejections on the top, you can see leaves this overhead resistance to deal with. So, having a few days hanging here, if that's in the cards, that is good because it moves prices away from these resistance area. And psychologically, you see that slowing in momentum, the strong emotions that were, in force here begin to dissipate a bit. And this is, as we look at the charts, again, we say that these are pictures of trader psychology, beliefs and expectations created with money. And so fear, selling, sideways, some of that begins to dissipate. Some confidence comes in based on, hey, it's not going down anymore. Maybe we should buy. And well, that's what we're looking for over the last few days. And we look at this objectively with the concept I've already explained. And then we look at other markets to see relative strength, relative weakness. Where is that? We're not saying, this is not broken the June low, so it's showing a little relative strength there. We've got the Russell, same story, stabilization. It's down near these lows. And, the Dow has already broken through its lows there. I wanted to move that over out of our way so we can see. So that's already broken through the June low down here at 29,000. And, ultimately, maybe it gets down here, which is, looking at this large area from 2000 where these overlapping bars are. So that's where the most significant support is, down here in that area. As we go into the next month, that'll be something that we'll be focused on to see, a few things before we think that. What does this do? Does it go sideways? How much does it bounce or not? Step by step. Always look at the transports, and no difference there. They've collapsed. They're hanging here near this 12,000. They do have this cluster of support here. And then the next level of pivots is down below. You see that big topping pattern, pretty bearish. So we need to see, we've got some capitulation. We'll see how the bounce goes and the next level of capitulation and the internals. But here's the internals down here, which got down almost to minus 400. And as long as I'm doing this, and the memories start to fade a bit, but this is about as low as I've ever seen this. Even in other bear markets, like minus 350. So again, a lot of selling going on here. Finally, the moving average moving into the lower bands here. So maybe today it'll be a little bit more. We'll see how that looks. Yeah, I don't, was it lower than that, Dan? Down here? Maybe. Back there in COVID, it fell so fast, but, what, do you remember what the level was? I'd have to go back and look at the newsletters at the time. I don't know if it was below minus 400. 385. Well, this is down right there. Data window. This is like whatever, I can barely see it. I don't want to, what time is it? 17. Get into fixing this. Anyway, let's see. I can't even see it. Anyway, I'll look later and I'll fix that up. So Bitcoin, man, that got a nasty rejection. And this is, the concept of a power move creating a void. And when that doesn't continue to hold the support that it begins to create, there's nothing to stop it from going down. And that's what happened there. It's a bear market, and maybe this is just part of the process of slowing momentum and trying to build some kind of a base here, but no confidence to hold on or buy the pullback. It just collapsed back down and it hit support and it tries to restart the process again. I can play it. Okay. Just reading other comments before I give it over to Dan. And silver, as we always look, it's just a big mess, nothing to do. If the dollar continues to pull back, this may bounce a bit, but it's just a terrible pattern. Terrible. There's too much congestion, no void, no bottoming. Gold, continues to move down. It's broken through all of this support. And, oil, that broke down. We covered that during the week. It's in a downtrend, a little extended, could bounce up here a little bit, but the next group of sellers just waiting up above to hit it on the head. And we already covered interest rates and internals. We covered a lot already today. So, so I'd say don't get chopped up today. We're looking for things to make this turn. Intraday trades, maybe some credit spreads materialize here, but there's just been this chop here. It's been a little boring, but believe me, it'll change. All yours, Dan.
Good morning. The internals during COVID low, they blew past the 2008 financial crisis. I was just salivating looking at those things, and we just set records selling put spreads down there. When the day we got the turn, the amount of premiums we were getting, I mean, for real companies, I mean, Disney, we were shorting $40 puts for like $3. Just crazy premiums when the VIX was that high. So all our opens are fine. We're actually pretty light inventory. Over yesterday's high, I'm gonna start picking up more put spreads, and they're better today than Monday or Tuesday, because then we'll have a bigger turn, number one, and number two, we have less days until Friday expiration. So I'll be looking for 0 DTE again here. Q's kind of the weakest here, rallied to yesterday's closing resistance. The other three horsemen went through it. Not over the high, but through this closing resistance. So IWM I have as a put spread watch. Home Depot here. It's making the turn. Here's a bullish new low divergence. So they made a new low, major support. Weekly still bearish, but if it takes out yesterday's high, which it's almost there, but then I'm going to be all over this for put spread for Friday. Got to watch the markets, of course, and get my bias from the horseman. This was in last weekend's letter to do a put spread over Friday's high. I'm just assuming it's gapping up with bib. They could have their own news, but it's just a logical assumption. And this thing gapping up 50%, that is a monster gap. My first reaction was, you always got to be careful on bios, but if you're a big diversified one, then I would have never have expected a 50% gap on one drug. I'm totally shocked at the size of this gap. I thought bib was more diversified. Here's one that somebody in the green room did short puts on the other day, and I've been trying every day. They're spreading. This RLMD is a bio, and you could sell the 10 or $7.50 puts, and they still have juice. That is amazingly far away. Look at that. It's under these yearly lows. That's unbelievable how juicy those are. And so that's telling me it is more of a one-trick pony than a diversified one. Rahul asking about DGX short. Just manage it. All new shorts are not low risk now with the rubber bands. Cooked so much. That's the problem. So and we've been spending a lot of time talking about the pattern for new shorts. And I mean, it looks, I think it's going to do whatever the market does. Market's perking here a little bit, pre-market right here. So this actually, if the Qs go sideways for 30 minutes, then this is an inverse head and shoulders or a day trade long. Left shoulder, head, right shoulder. That's a perfect inverse head and shoulders. So let's see what it does. I had the same bullish bias yesterday, and we nailed the entry on a 0 DTE, and then it fell apart. I mean, good thing we closed half. Or no, that was the 0 DTE that we did on Monday. LGVN, That's has a nice gap, but still nasty downtrend. So XBI, let's watch. For a put spread, you know, bib is obviously dragging it up. This kind of looks like a SPAC or a Reddit boy toy. I don't know what happened here on that blast off. And then look at this topping tail. That's nasty. So now it's getting its head chopped off in half here again. XOP over 30-minute high or yesterday's high. Let's keep an eye on a put spread. We were looking at that yesterday morning in the strength. And we said, let's see how it closes. But now I like it better. So that's 30-minute high. Now Mo, yeah, Mo is a better new short than that DGX to me. It's a 1, 2, 3 bearish weekly, monthly. Yeah, and it's gapping up. So I'd say 30-minute low. It's gapping up only 21 cents. So I would say under pre-market low, Thomas. If it can't bounce with the market, give it, I don't know, 5, 10, 15 minutes. And if the market turns weak, yeah, that's a go-to starting off for a day trade. Yeah, PayX, that's a earnings with, yeah, let me get to those right now. Here are the earnings stocks, Calm. If it can, I'd say set an alarm at 61. If it can get back through this little 15-minute pivot, there's not many charts out there that have that amazing arrangement of moving averages. BlackBerry's a Climo, gapping down, but it's a dog. PRGS, I can't tell where it's gapping, but nasty downtrend. PayX 116. I would say put it in a window. See how it sets up here intraday. Yeah, I'll put it right here in Splunk's case. Netflix I posted as a put spread over yesterday's high. That's a buy setup on support. I got an upgrade today. In the FANG department, Apple's under pressure here. They're saying they're not going to make their new iPhone as fast. So McGraw, you're good at this. Keep an eye on their suppliers too. That's how you trade news. You know, who's going to benefit, who's going to help, hurt. And the suppliers obviously are going to get hurt. Less business for them. So Dan Mann is asking me about Apple short. I'd say 30-minute high, 30-minute low. Sorry. Yeah, it's a bearish gap. You just got to watch them. We don't come out firing at the market open unless it's a beautiful gap thing. You got to be a tad more careful in shorting Apple just because it's such a Wall Street love. But it's a bearish gap. It's a watch. Sure. PD Duck will SPY 365 offer up enough reward as did 370 yesterday. Depends how many DTEs, PD. And it depends. I mean, your question's not totally clear to me. If you're talking about doing a 0 DTE, Spider 365, then wait, you wouldn't do 365 because that's in the money. Yeah, you got to clarify your question for me. But yeah, and it depends if you're doing an intraday sell-off in reversal versus into strength over prior bar's high. That's how much juice you're going to get. Yeah, FT, of course, it's at support, but again, people have a lot of problem with this concept, and it does take a while to internalize it. But you can't just say, oh, there's support, I'm going to start buying. kind of like that AMD we were talking about the other day. It depends how it got here and what multiple time frames are saying. This isn't a downtrend now. You had a 180, and so now it's gapping under these 4 bars. If this takes out a 15-minute low, then short it. Let's just wait 15 minutes. And of course, I can change that timetable, but just put it in a window. But if it bounces for 15 minutes and then takes out the low, I think it's going lower. You got a price for it. Look at all these football players. SMH or weak, yeah. Yeah, remember we were talking about AMD, and you know, some people were saying, oh yeah, but look at this prior support on the weekly. I'm like, yeah, but it's going to go through it. Look at how it got through here. And with that topping tail, that's screamed lower prices to me. All right, my Home Depot alarm, not Home Depot, my Netflix alarm has not gone off yet. So that's now it just hit. All right, so Netflix. Let's see what I posted. I always give limits, just kind of as a governor. So people, sometimes I'll say midpoint where I don't want to miss it. I'm like, dude, whatever the midpoint is, just get in it. But 90% of the time, I give a limit. Just, you all know what a governor is on your automobile, not a governor of your state. So a governor means, all right, slow down. Let me take a look and see if it still looks good. All right, 215, 200. Actually, see now there's not enough difference in the 205 and the 200 that I'm going to do $10 wide. So I am going to adjust it right now. And I said 135, so there's no way that got filled. 0. All right, so now the horsemen are